ExamPrep.School. Arizona Life Accident and Health Insurance Producer Exam. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Annuities, disability income and related insurance, federal laws and regulations, federal tax considerations for life and health insurance, general insurance concepts, group health insurance, individual accident and health insurance policy provisions, insurance regulation, life insurance policy provisions, options, and riders, life, accident, and health insurance basics, medical plans, specialized health insurance for qualified individuals, types of life insurance policies. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following must be included with an initial application for an Arizona resident insurance producer license? A. Articles of organization for any associated business entity operating in Arizona. B. A fingerprint clearance card issued by the Arizona Department of Public Safety. C. A copy of a current automobile liability insurance policy declarations page. D. Proof of completion of a 24-hour ethics training course. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. This option is correct because Arizona law requires a fingerprint clearance card from DPS to conduct a background check for initial resident producer license applicants. Reason A is not correct. Articles of organization for an associated business entity are not required for an individual's resident license application. Reason C is not correct. A current automobile policy declarations page does not pertain to licensing prerequisites. Reason D is not correct. Completion of an ethics training course is part of ongoing education, not part of the initial application. Question 2. Which of the following is not an acceptable form of lawful presence documentation for an Arizona insurance producer license applicant? A. An original U.S. certificate of naturalization. B. A valid Arizona driver license issued after 1996. C. A U.S. passport card. D. A federal enrollment card for membership in a recognized tribe. The correct answer is D. This option is correct because tribal enrollment cards alone are not listed among Arizona's statutorily approved documents for proving lawful presence in license applications. Reason A is not correct. Naturalization certificates are explicitly accepted for lawful presence verification. Reason B is not correct. Arizona driver licenses issued after 1996 demonstrate lawful presence and are accepted. Reason C is not correct. U.S. passport cards are valid proof of citizenship and meet the requirement. Question 3. Jordan has taken Arizona's life insurance producer licensing exam 3 times without passing. Under Arizona regulations governing initial licensing examination attempts, how long must Jordan wait after the 3rd unsuccessful attempt before scheduling another exam? A. 30 days from the date of the last attempt. B. 45 days after submission of a new application. C. 180 days after the date of the 3rd unsuccessful attempt. D. 360 days after completion of an approved review course. The correct answer is C. The correct answer is based on Arizona regulations that impose a mandatory 180-day waiting period after a 3rd unsuccessful attempt at the same initial licensing examination. Shorter intervals apply only to earlier retakes, and additional coursework does not alter the statutory waiting period. Reason A is not correct. A 30-day interval applies only between the first 2 retakes and does not apply after the 3rd failure. Reason B is not correct. Submitting a new application does not shorten the mandatory waiting period imposed after the 3rd unsuccessful attempt. Reason D is not correct. Completion of a review course does not reset or extend the regulatory waiting period, which is fixed at 180 days after the third failure. Question 4. Under Arizona insurance producer continuing education requirements, how many credit hours must a resident producer complete during each renewal cycle? A. 18 credit hours. B. 20 credit hours. C. 24 credit hours. D. 30 credit hours. The correct answer is C. The correct answer is 24 credit hours because Arizona requires resident producers to complete 24 hours of continuing education every renewal cycle for license renewal. Reason A is not correct. 18 credit hours is below the state requirement of 24 hours, making it incorrect. Reason B is not correct. 20 credit hours is less than the required 24 hours for renewal. Reason D is not correct. 30 credit hours exceeds the mandated 24, so it is not the required amount. Question 5. Which of the following is an approved continuing education course type under Arizona law for producer license renewal? A. Interactive online webinars offered by approved providers. B. Vendor-sponsored product training programs for employees. C. In-house compliance training workshops for insurance staff. D. On-the-job field training experiences with senior producers. The correct answer is A. The correct answer is interactive online webinars offered by approved providers because Arizona recognizes distance learning from approved providers as qualifying CE. Reason B is not correct. Vendor-sponsored product training programs are not recognized for CE credit unless provided by an approved CE provider. Reason C is not correct. In-house workshops must be approved by the state to count, so generic compliance sessions are not accepted. Reason D is not correct. On-the-job field training does not meet the structured course requirements for CE credit. Question 6. Under Arizona law, which of the following would be considered misrepresentation or false advertising of an insurance policy? A. Advertising a policy with a guaranteed dividend rate that is not guaranteed by contract. B. Disclosing the policy's waiting period for certain benefits. C. Including a statement that policy illustrations are not guarantees of performance. D. Publishing the insurer's AM, best financial strength rating without commentary. The correct answer is A. The correct answer is that representing a non-guaranteed dividend rate as guaranteed constitutes prohibited misrepresentation or false advertising under Arizona insurance regulations. Reason B is not correct. Disclosing waiting periods is required and transparent, so it does not constitute misrepresentation. Reason C is not correct. Including a disclaimer that illustrations are not guarantees is a mandated disclosure, not false advertising. Reason D is not correct. Publishing a recognized financial strength rating is permissible factual information, not a misrepresentation. Question 7. Under the Fair Credit Reporting Act, which of the following best describes the primary purpose of the Act? A. Requiring consumer reporting agencies to guarantee the accuracy of all credit reports. B. Protecting consumer privacy by establishing procedures for collecting, maintaining, and distributing consumer credit information. C. Creating a federal licensing framework for credit bureaus and reporting agencies. D. Allowing unrestricted access to consumer credit histories for employment and insurance purposes. The correct answer is B. The correct answer is that the Act's main objective is to safeguard consumer privacy by setting standards for how credit information is collected, stored, and shared. Reason A is not correct. Guaranteeing accuracy is not required by the Act. It mandates reasonable procedures, not a guarantee. Reason C is not correct. The Act regulates consumer reporting agencies, but does not establish a federal licensing system for them. Reason D is not correct. The Act actually restricts access to credit histories rather than allowing unrestricted use. Question 8. Under the Fair Credit Reporting Act, insurers seeking consumer reports for underwriting must provide which of the following before obtaining the report? A. A notice combined with a general insurance application form. B. A standalone written disclosure that informs the consumer a report may be obtained. C. An oral notification when the application is submitted. D. A copy of the consumer report after it is received. The correct answer is B. The Act mandates that a separate, standalone written disclosure be provided to a consumer before a report is obtained for underwriting purposes. Reason A is not correct. Combining the notice with the application violates the requirement that it be separate. Reason C is not correct. An oral notification does not satisfy the written disclosure requirement. Reason D is not correct. Providing a copy after receipt does not meet the pre-report disclosure mandate. Question 9. Under 18 U.S.C. Section 1033, which of the following convictions disqualifies an individual from engaging in the business of insurance? A. Felony conviction for assault with a deadly weapon. B. Misdemeanor conviction for an offense involving breach of trust. C. Felony conviction for an offense involving dishonesty or breach of trust under federal or state law. D. Violation of a civil confidentiality agreement. The correct answer is C. This option is correct because the statute specifically prohibits individuals convicted of any felony involving dishonesty or breach of trust from engaging in the business of insurance. Reason A is not correct. An assault conviction, even as a felony, does not involve dishonesty or breach of trust as defined by the statute. Reason B is not correct. The statute requires a felony conviction, so a misdemeanor breach of trust does not meet the disqualifying threshold. Reason D is not correct. A civil breach of a confidentiality agreement is not a felony offense under federal law and thus is not disqualifying. Question 10. Carlos, a former bank executive convicted of fraud, was approached by an insurance company to sell life insurance policies. Before Carlos can legally engage in the insurance business, which entity must provide written consent under 18 U.S.C. 1033? A. Secretary of the Treasury. B. State Attorney General. C. Federal Bureau of Investigation. D. State Insurance Commissioner. The correct answer is D. Under 18 U.S.C. 1033, an individual convicted of specified felonies must obtain written consent from the state insurance commissioner of each state in which they wish to transact insurance business. This requirement ensures state regulatory oversight of individuals with prior convictions. Reason A is not correct. The Secretary of the Treasury is not the designated state regulator for approving convicted felons to engage in insurance activities under federal law. Reason B is not correct. The State Attorney General enforces consumer protection statutes, but is not responsible for granting consent under 18 U.S.C. 1033 for insurance activities. Reason C is not correct. The FBI investigates federal crimes but does not issue the written consent required for convicted individuals to engage in insurance business. Question 11. According to the National Do Not Call Registry rules, how long after a consumer's last life insurance premium payment does an insurance producer's established business relationship remain valid for placing solicitation calls to a number on the registry? A. 3 months. B. 18 months. C. 12 months. D. 24 months. The correct answer is B. The established business relationship exemption for insurance solicitations continues for 18 months after the date of the last premium payment, even if the number is on the Do Not Call registry. Reason A is not correct. That shorter period applies only to initial inquiry calls, not ongoing policy relationships. Reason C is not correct. A 12-month period is not recognized for insurance EBR under the federal registry rules. Reason D is not correct. The exemption does not extend as long as 24 months after the last premium payment. Question 12. In insurance terminology, risk is best defined as which of the following? A. Uncertainty regarding the occurrence or magnitude of potential loss. B. The measure of probability that an insured event will occur. C. The financial amount specified for coverage in a policy declaration. D. The deliberate exposure to a hazard for speculative purposes. The correct answer is A. The correct answer defines risk as the uncertainty of loss occurrence or severity in insurance contexts. Reason B is not correct. It incorrectly focuses solely on probability rather than overall uncertainty of loss. Reason C is not correct. It describes policy limits, not the concept of risk. Reason D is not correct. It describes speculative exposure, not the inherent uncertainty in losses. Question 13. Which statement best distinguishes pure risk from speculative risk? A. Pure risk involves only the possibility of loss or no loss, while speculative risk includes potential gain, loss, or no change. B. Pure risk is always insured, whereas speculative risk is never insurable. C. Pure risk involves intentional acts, while speculative risk arises from natural events. D. Pure risk has a higher probability of occurrence than speculative risk. The correct answer is A. The correct answer contrasts pure risk's loss-only outcomes with speculative risk's possible gains, losses, or neutral outcomes. Reason B is not correct. It overgeneralizes insurability but doesn't address outcome possibilities. Reason C is not correct. It incorrectly attributes cause instead of outcome potential. Reason D is not correct. It misrepresents probability differences rather than outcome types. Question 14. Which element of an insurable risk is lacking in this situation? A. A sufficiently large and homogeneous exposure group. B. Losses that are accidental and unintended. C. Losses that are definite in time, amount, and cause. D. Premiums that can be reliably computed and remain economically attractive. The correct answer is D. The correct answer is premiums that can be reliably computed and remain economically attractive because the insurer's inability to estimate loss frequency from limited data prevents setting an actuarially sound, affordable rate. Reason A is not correct. The issue is not about the size or homogeneity of the exposure group, but about premium determination from loss data. Reason B is not correct. While accidental and unintended losses are required, the scenario focuses on the inability to set premiums, not the nature of losses. Reason C is not correct. Although losses must be definite, the scenario describes difficulty in estimating and pricing, not identifying loss details. Question 15. Which of the following is a distinguishing feature of a stock insurance company? A. Ownership by policyholders who share in dividends. B. Operating without capital stock and issuing participating policies. C. Issuance of capital stock to shareholders for equity financing. D. Requirement to mutualize surplus reserves for policyholder benefit. The correct answer is C. The correct answer is the issuance of capital stock to shareholders for equity financing. Because stock insurance companies are owned by shareholders who provide capital through stock and may receive dividends based on profits. Reason A is not correct. That describes mutual insurers owned by policyholders who share in surplus dividends, not stock insurers. Reason B is not correct. Operating without capital stock and issuing participating policies is characteristic of mutual insurers rather than stock insurers. Reason D is not correct. Mutualization of surplus reserves pertains to mutual insurers, not stock companies. Question 16. Which of the following best describes a defining characteristic of a mutual insurance company? A. Ownership by shareholders and tradable stock issuance. B. Requirement to distribute dividends exclusively to external investors. C. Policyholders owning the company and sharing in surplus dividends. D. Incorporation as for-profit entities subject to corporate income tax. The correct answer is C. The correct answer is policyholders owning the company and sharing in surplus dividends, because mutual insurers are owned by their policyholders, who share in the insurer's surplus through dividends. Reason A is not correct. Shareholder ownership with tradable stock issuance describes stock insurers rather than mutual insurers. Reason B is not correct. Mutual insurers distribute dividends to policyholders, not exclusively to external investors. Reason D is not correct. Mutual insurers are not structured as for-profit taxable corporations in the same way as stock insurers. Question 17. A local lodge of a fraternal benefit society offers life insurance coverage exclusively to its members. After a sudden spike in mortality claims leaves the lodge's reserves insufficient, the society must follow its operating principles to address the funding shortfall. Which of the following actions is unique to fraternal benefit societies in this scenario compared to commercial insurers? A. Levying a supplemental assessment on its members to raise additional funds. B. Borrowing funds from a commercial insurer's surplus account. C. Increasing future premium rates for all new applicants. D. Allocating additional policy dividends to existing certificate holders. The correct answer is A. The correct answer is the supplemental assessment scheme, which fraternal benefit societies may impose on their membership under their governing bylaws to cover unexpected claim expenses. Reason B is not correct. Borrowing from a commercial insurer is a strategy available to licensed insurance companies, but not a feature of fraternal benefit societies. Reason C is not correct. Raising premiums applies only to new business and cannot rectify an existing reserve deficit under fraternal bylaws. Reason D is not correct. Adjusting policy dividends returns excess surplus to members rather than directly funding a claim shortfall. Question 18. Which of the following is not one of the four essential elements of a valid insurance contract? A. Competent parties. B. Offer and acceptance. C. Legal purpose. D. Utmost good faith. The correct answer is D. The correct answer is that utmost good faith is a guiding principle of insurance contracts rather than one of the four essential elements. Those are offer and acceptance, consideration, competent parties, and legal purpose. Reason A is not correct. The presence of competent parties is a core requirement for a valid insurance contract. Reason B is not correct. Offer and acceptance form the agreement element, which is essential to contract formation. Reason C is not correct. Legal purpose is one of the four required elements, ensuring the contract's subject matter is lawful. Question 19. Which one of the following best describes the legal purpose requirement in life and health insurance contracts? A. Requiring that the insurer provide full restitution to the insured for covered losses only. B. Mandating that the policyholder maintain an insurable interest throughout the contract's term. C. Ensuring the contract's consideration and subject matter are not illegal or against public policy. D. Stipulating that any misrepresentation by the applicant must be proven to void the contract. The correct answer is C. The correct answer is that the legal purpose requirement ensures the contract's consideration and subject matter comply with law and public policy. Other options describe insurable interest, indemnity, or misrepresentation rules, which are separate requirements. Reason A is not correct. Providing restitution for losses pertains to the principle of indemnity, not legal purpose. Reason B is not correct. Maintaining an insurable interest is a distinct requirement separate from legal purpose. Reason D is not correct. Misrepresentation provisions relate to contract offenses rather than the purpose requirement. Question 20. After Maya applied for a life insurance policy and submitted the initial premium, the insurer evaluated her application and issued a revised policy reflecting a higher premium. Maya signed and returned the revised policy along with the additional premium payment. At what point was a binding contract formed? A. When the applicant submitted the initial premium with the original application. B. When the insurer signed and mailed the policy reflecting the agreed-upon premium. C. When the applicant returned the signed policy with the additional premium payment. D. When the underwriter provided a written notice of application approval to the agent. The correct answer is B. A binding contract in insurance is formed when the insurer accepts the applicant's offer by signing and delivering the policy reflecting the agreed premium, regardless of earlier steps. Reason A is not correct. Submitting the initial premium with the application constitutes an offer, not acceptance, because the insurer must formally accept before a contract exists. Reason C is not correct. Returning the signed policy and payment indicates acceptance of the insurer's counteroffer, but does not itself establish the contract until the insurer signs and delivers the policy. Reason D is not correct. Underwriter approval communicated to the agent is an internal acceptance step, not the formal establishment of a contract with the applicant. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.